So let's talk a little bit about the S&P 500. The S&P 500 is definitely the most popular of the market indices. It is the index that everybody looks at to gauge whether the market is doing well or not doing so well. So when we talk about the S&P 500, when we're trading it, typically we're trading products like SPY, SPX, the ES futures, the MES futures, and sometimes XSP, which is a smaller version of SPX. And these various S&P 500 products, of course, they have different notional sizes, and they also differ as far as what their underlying asset is, if they have an underlying asset. So today I wanted to cover these various S&P 500 products, how they are different from each other, and which ones should you choose to trade. So there are probably about 100 different products out there that are based on the S&P 500 index. Today, I'm just going to cover the 5 what I consider the most popular as far as trading vehicles, especially for those of us that trade options. So today we're going to be comparing SPX, SPY, the ES futures, the MES futures, and XSP. So if we take a look at this table I created here, here are the 5 different ticker symbols, and here is how they compare in size compared to SPY. And I'm comparing everything to SPY because I think we've all traded SPY at one time or another. Many of us hold shares of SPY as far as a long-term investment plan. Many of us accumulate shares of SPY. We know what kind of product SPY is. So let's compare everything to SPY. So let's start with SPX, which is the S&P 500 index. It is 10 times the size of SPY. So SPX really is a big boy product. I mean, SPY is a really big product because SPY is currently trading. What is SPY currently trading at? Let me actually go pull up a chart of SPY here. So SPY is currently trading, as of the time I'm recording this, at $532 per share. That's a big product. 100 shares of SPY would cost you $53,000, right? But SPX is 10 times that size, right? So you're talking about a notional amount of more than $500,000, right? So instead of the $53,000 it would take to buy 100 shares of SPY, to have that same equivalency of SPX as far as 100 shares, even though SPX doesn't have shares, it's an index product. But if you're selling options, remember options represent 100 shares of the underlying. So in this case, you would be talking about a notional amount of, again, $530,000 or so. That is a huge product. Most people can't trade this product. You certainly can't trade naked options in this product unless you have a very large account. Now, I mentioned that SPX is the S&P 500 index, and all index products have something in common. They don't actually have shares because they're tracking an index, right? So if I actually go to the trading platform here and I go to SPX, and let's say I want to actually trade SPX. So let me go to trade and let me go to long stock. Well, SPX does not support this strategy stock because there is no stock. There are no shares. If you look at volume here for share volume, right? Nothing gets traded, right? There are no shares. So any kind of technical indicators that are based on volume, for example, don't work on an index product like SPX because, again, it doesn't actually trade in shares. The only thing you can trade in SPX is options. So you can go into an options chain and you can trade all the options you want, and they're very liquid options. You can say I've got volume here, and you can see, you know, thousands of contracts on most of these strikes. So what happens on an index product is, since there's no underlying shares, all of your options, when they get exercised or assigned, they settle to cash because there is no underlying product to be settled to. Everything is settled to straight cash. So you don't have to worry about being assigned shares of a product that you don't want or being assigned a futures contract that you really didn't want. You don't have to worry about that with index products. Now let's talk about the ES futures, because this is another very popular product. It's also another big boy product. It is 5 times the notional size of SPY. So once again, you know, you need some money to trade naked options on this product. I would say you probably need at least $100,000 or more in an account to sell one naked option in ES, and really I would say you probably need $250,000 or more to really comfortably trade naked options in ES. Now ES of course is a futures product, so it does have an underlying that naked options do settle to. They settle to one futures contract. So if you sell a naked put, for example, and it gets assigned, it will be delivered to you as one futures contract. Liquidity for the ES futures is fantastic. So just like SPX had great liquidity, the ES futures also have great liquidity. Again, these are some of the most liquid products that you could possibly trade, and probably the most liquid product that you could possibly trade is actually SPY. Now SPY is the S&P 500 ETF. So this does have shares. This is the only product in this table, by the way, that has shares that you can buy and hold for the long term. That's part of why it's so popular, is because so many of us do accumulate shares of SPY. That's what we want. You know, everything we do is centered around eventually building a large portfolio of SPY, you know, to hold for the long term, because the S&P 500 typically averages about 9 to 10% on average a year as far as returns. So SPY, accumulating a lot of shares of SPY, is a fantastic way to passively invest your money. But of course, it's not just the shares themselves that trade. Obviously, we have options on SPY as well, and the option markets in SPY, again, are probably the best that you could possibly get. So liquidity is not a problem with SPY. So we've talked about an index product, we've talked about a futures product, and of course, we've talked about an ETF, which is an equity. It has shares, and a lot of people don't like selling naked options on something with shares. They prefer something that settles to straight cash, right? And that's why they like index products. So there is a very similar index product to SPY. It is XSP, which is essentially just like SPX, except instead of being 10 times the size of SPY, it's the same size as SPY. So it's just like trading SPY, except it is an index product, so there's no shares. If you get assigned, everything settles to cash, which is pretty fantastic if you don't want to be assigned shares. Now, liquidity, unfortunately for SXP, is okay. And when I say okay, I mean it's okay at best. It is not the greatest as far as liquidity. And then finally on this chart, we have the MES futures. So that's the micro ES futures, and it is half the size of SPY. So you can see 0.5 times the size of SPY. It is a futures product, of course. So if you get assigned, it settles to one futures contract. And just like XSP, the liquidity for MES is just okay. I would say MES liquidity is actually better than XSP, quite a bit better in my opinion, but it is nowhere near the liquidity that SPY, ES, and SPX have. So let's talk about how these products differ. So one thing you need to know, all 5 of these products do track the same index. They all track the same S&P 500 index, thus they are perfectly correlated. So they all have a 1.0 correlation to each other. They're basically mirror images of each other. So if the S&P 500 is up 1.2% today, that means all 5 of those products are also up 1.2% today. They move exactly the same. Another great thing about these 5 products is all of them have daily, weekly, and monthly expirations. So if you like 0 DTE options plays, you can trade 0 DTE on all of these if you like that. For me, I prefer a longer dated expiration, so I'm typically hanging out in the monthly expirations. Sometimes I'll do the weeklies, but those of you that like the dailies, you have that as an option as well. Now, for those of you that trade a lot, and especially for those of you that have bigger accounts, you need to know that there are possible tax advantages to trading index products and futures products. So if you have a big account and you're a very active trader, you really want to be trading things like SPX and the ES futures, because again, there are possible tax advantages to trading those products as opposed to an equity product like SPY, for example. So I'm not a tax professional, so I'm not going to go into detail on that. I would say consult your accountant if you want further information on the advantages of trading index and futures products. And we've already talked about that the futures products, they settle to one futures contract, and that happens on your monthly expirations, but there is a quarterly expiration every 3 months, and that is when the futures itself really does expire. And at that point, everything does settle to cash. So every third month, if you're assigned then it actually does settle to cash. So just be aware of that. Another advantage to trading futures is that futures have more leverage, especially for those of us in a Reg T margin account, which is your standard Reg T margin account where you typically get 2-to-1 margin on your money. Futures products are different. They have a different kind of margining system, and you could get 5-to-1 or 6-to-1 leverage on some of these futures positions that you open. So your buying power is much less on some of these futures positions compared to the same kind of position in a product like SPY, for example. What this means is that you could actually get a larger return on your capital by trading the futures product rather than SPY. And another advantage that futures have over index products and over equity products is that the futures products have longer trading hours. So they begin trading on Sunday night at 5 p.m. Central Time, and they trade all the way until 4 p.m. the next day. And then from 4 p.m. to 5 p.m., there's no trading during that hour. That's called a daily maintenance period. But essentially, the futures products they trade Sunday through Friday from 5 p.m. to 4 p.m. for 5.5 days. The last bullet point on this page, index products have no underlying stock to trade. I've already mentioned there's no shares, thus there's no share volume, and all options settle to cash. The only one of these 5 products that actually has shares is SPY. So for long-term investors, SPY is probably the product you want to be trading if you're trying to acquire shares through the use of, for example, selling naked puts. Also, if you're a long-term investor, you like acquiring shares that pay a dividend, and SPY does pay a dividend because a lot of the companies that comprise the S&P 500, they pay a dividend. So SPY itself also pays a not so insignificant dividend. It's a pretty good dividend. And because it's a pretty good dividend, you need to be aware of that dividend if you're trading short calls on SPY, because if you're holding short calls, especially close to expiration, and those short calls, if they're close to at the money near expiration, you could face a possible early assignment, so be careful of that. Liquidity on SPX and ES and SPY are outstanding. The liquidity on XSP and MES, they're not so good. They're tradable. They're certainly tradable. Just know they're not nearly as liquid as the big boy products. And because of that, I would actually recommend, if you're going to use defined risk strategies, so if you, for example, are selling a credit spread or selling an iron condor, maybe you're buying a debit spread or you're buying a butterfly, whatever it is you're doing, as long as it's a defined risk strategy, go ahead and use the big boy products. Do that in ES, for example, or SPX or SPY, whichever product you prefer, because that's fine. It's a defined risk strategy, so you really can't blow up your account. And really, all you have to worry about are those undefined risk strategies. So your naked calls, your naked puts, your naked strangles. If you're doing anything with naked options and you have a small account, then you're kind of forced to use MES. So MES is typically what you want to be trading, possibly XSP, but again, I find the liquidity in MES better. Plus, MES is a futures product. You're going to get better leverage on your money. So if you have a smaller account and you want to do naked options, MES really is your only option, no pun intended. And if you're fortunate enough to have a very large trading account, say $1 million or more, especially if you have an account of several $1 million or more and you're a very active trader, then you really have to trade SPX. SPX is your product. And the reason for this is because SPX is so much larger than everything else we've talked about. For example, it's 10 times the size of SPY. So that large size of SPX means you pay less in commissions because it takes less contracts of SPX to do the same notional amount of things as the ES futures or SPY. And again, because you're dealing with a large sum of money, and if you're a very active trader, if you're somebody that makes thousands of trades a year, or especially if you're somebody that makes tens of thousands of trades a year, those commissions can really add up. So again, if you have a very large trading account, SPX, that's where you want to be. So there you have it. We compared 5 of the most popular S&P 500 products as far as the most popular products to trade options on. If you want to learn more about some of these great underlying products that you could trade options on, check out my book, The Super Wheel Option Strategy. Of course, it's about my favorite option strategy, which is the wheel strategy, but I do have a chapter in this book called The Underlyings, and in that chapter, I cover the most popular index products, ETFs, futures products, as well well as some individual stocks that I think most people should track. So please check out that book. The link is in the description below. Peace, guys.